Next guest just initiated coverage of the whole sector, and he has a list of the stocks worth owning. Let's bring in Shaul Eyal. He is the analyst at Cowen. I hope I pronounced that right, Shaul. Welcome to you. What is the main thing you're looking for in picking which names in the cybersecurity space you want exposure to right now?
I think one of the things we keep seeing out there, and Kevin addressed part of that, is that shifting infrastructure from on-premise to off-premise. And I think in that respect, you mentioned CrowdStrike, you mentioned Cloudflare. Both these names have been born in the cloud. They provide great cloud infrastructure. And in that respect, we are seeing them trading at outperformance level nowadays. They do provide some of the solutions that potentially could have prevented in some sort of way some of the attacks that we have been seeing over the course of the past few months now. And also, you mentioned Checkpoint, you mentioned F5. These are companies that predominantly address on-premise infrastructure, even though they have started to provide some cloud-related solutions. So we are seeing those shifts in appetite actually to own more of the SaaS cloud security-driven names.
Excuse me, Shaul, let me make sure I got this right. So you want the names that are in the cloud, or you want the names that are doing on-prem?
So we have a preference towards names that are predominantly geared towards the cloud. That's number one. But at the same time, there's another group of hybrid providers, those companies that do provide both on-premise with off-premise / cloud solutions. In that respect, Fortinet is another top pick on which we published quite recently, and also is making all new historical highs on a daily basis.
Why do you think it is? I mean, this could be the kind of environment where cybersecurity names are the next great secular growth story and investment. Why is it that some of them have just had a difficult time outperforming the market? Is it because they now have to invest so much to keep up with the hackers and make sure that they are on the cutting edge? Does that pressure their earnings? Why is it that they just, a lot of these names struggle even to match the market?
Sure. So I think what we have, to be fair here, if we go back to 2020 on the heels of Corona and the aftermath, the cybersecurity as a whole traded up about 100%. So what we are seeing is a combination of profit taking on the one hand, but some investors that are taking a longer-term view towards the cloud-related names and see the investments that go into that. They are willing, for the time being, to let go of some current and near-term profitability for the sake of top line and revenue acceleration, as well as billing acceleration. So we have been seeing that. Those companies' business models typically scale within a matter of 3 to 4 years. You brought up CrowdStrike. CrowdStrike is about to triple its ARR from $1 billion to $3 billion over the course of the next 3 years. Investors are willing to make that current investment and see the profitability and the cash flow leverage coming down the road.
Shepard Smith here. Thanks for watching CNBC on YouTube.